Well, Jamie Dimon threw the markets for a loop when he announced a massive trading loss for JPMorgan. We have David Riley here with us to tell us all about it. Thanks for joining us, David.
Good morning. So Friday's going to be the big day. JPMorgan out with its results, and we're hopefully finally going to hear the details of this huge loss that we now know came from the London whale, and is it going to be $2 billion, $4 billion, $6 billion, $8 billion? All will be revealed.
Right. So this is not only going to peel back the layers of how big this loss is, but also how do you offset this? How do you hide a $5 billion loss in a balance sheet?
Well, I wouldn't say hide, but how do you cushion? I think that's going to be one of the big questions, because it's not going to just be what's the profit that JPMorgan shows. Jamie Dimon said twice last month when he's appearing on the Hill before the Senate Banking Committee and the House Financial Services Committee that the bank would be solidly profitable in the second quarter. So that begs the question, well, how is this going to be solidly profitable if you have, say, a $4 or $5 billion extraordinary loss from this unusual trading that took place? So there's a couple of different levers the bank can potentially pull, or things that will offset this. The first one is that these losses occurred in a unit in London that manages about $360 billion in securities. Now that portfolio was sitting on about $8 billion in gains at the end of the first quarter. So there's a chance they might sell some of those off. So that can help absorb some of the loss.
Right, and I think one of the things you pointed out in your column today was that there was another option they could take, kind of dipping into these litigation reserves, and that might not offer that much more clarity about how they're going to offset these losses.
Well, that's one of the things that banks are so difficult sometimes to see what's happening, especially the biggest ones, because you have these different reserves. So you'll have the loan loss reserves, and they're probably going to be releasing some of those, so that helps bolster profit. And then you have the litigation reserves, which I was writing about this morning, and that's really a murky area, because the bank never has to say how much they actually have in litigation reserves. So, and you can't even really see from their earnings release how much they're adding to it in a given quarter. So if you look back to the second quarter of last year, they said they had $1.3 billion in additions to their litigation reserve, which is a charge against profit. But then when you go to some of the bank regulatory documents, you see that actually they had $1.9 billion. So when you're trying to compare this quarter to that quarter, there's sort of potentially almost about $2 billion of flex in there.
So you could do some kind of mathematical wizardry around in there, and that's how they could become profitable again.
Well, it's not going to make them become profitable per se, but it's definitely, if you look, let's say for argument's sake, in the second quarter of last year they made $5 billion, but they had that $2 billion in litigation expense. Well, they were actually $7 billion. So if you don't take that this year, you're starting off from a much higher base, and it can help you with your comparisons against last year.
Right, and I think you said the markets are bracing themselves for a $4 to $5 billion loss. I mean, what are the odds we could see something much higher?
$4 to $5 billion when you're talking about what was the loss from the London whale.
From the London whale.
I don't think anyone's thinking that sort of loss on a net basis for the bank. The expectation is that the bank will come in with a couple of $1 billion of net profit. The analyst consensus is for about 80 cents a share, 80 to 85 cents a share, which will compare to, I think it was $1.27 a year ago. So it's definitely going to be a big drop, and revenue will be a lot lower. So you have the loss from the London whale, and then how that will cut into profit, and that's what we're hoping to find out on Friday.
Okay. You know, we all remember there was a huge political backlash when Jamie Dimon first acknowledged the magnitude of this trading loss. I mean, do you get the sense that this report could kind of reignite that fury, or are we in a recovery phase where, we're not really worried about that, we're just worried about how you make it up?
I think from the bank's perspective, they see this as their chance to sort of put this somewhat to bed, because I think the sense you get from some of what Jamie Dimon was saying on the Hill, also what he wasn't saying, is that they have, to use their phrase, pretty much box this in. So I think they've unloaded a lot of the positions, and there'll be some potential for loss going forward, but I think they're going to try and say, okay, here it is, here's what the biggest hit is, let's move on from there. And I think probably if they've got most of it under wraps, the market certainly will move on, and I don't know that politically this will have that much more legs.